everybody. Good evening. Good evening. Another thing I'll share with you guys. I'm really busy during the day. So this is about the only time I have to go live. Sorry that this is sometimes late at night, but there's a lot to talk about, so thought I'd go live. Before we get rolling, let me start with my usual. I'm not a licensed financial advisor, so anything you hear here is just education, entertainment. You can take and consult what I have to say. I'm not here to make money on anybody or sell anything. I'm just here to share my thoughts. It helps me stay sharp with my trading when I'm trying to defend, things that I see and why I see what I see. It helps me stay sharp, so you guys are here to help me become a better trader. That's it. And maybe look at my analysis and maybe learn, not learn anything, but maybe take what I have to say or things that I brought up and you can maybe put that in your own analysis. But if you end up just blankly taking my advice and just taking trades based on what you hear here in an ad hoc YouTube session, you're going to end up losing all of your money for sure and living in a van down by the river with Doge and Boneholder. And Doge, he's not doing too good today, is he? Doge is having a rough day, so you don't want to be down there with Doge. So, see here, we got some people coming in. Thank you all for joining. Sorry about the late start again. Am I looking for longs? Timothy, yes I am. You saw me getting really active on Twitter and Discord too with the CTM community and looking at trades. I'm picking up my activity because I get the sense that we're coming close to the capitulation I've been looking for. So yeah, I'm ready to go long again here pretty soon. I'm sure most of you know I've been mostly on the sidelines since we lost these two moving averages. I personally closed all leverage trades through here. We lost that 50-day, and I closed a bunch of my spot here. My tradable position I closed there. I still have a long-term hodl position that I'll hold to. Anyway, yep. So I'm now looking for fresh longs. What do we do now? That's the title of this. What we're talking about today. What do you do now? If you've been holding and you're just holding on for dear life, do you need to worry about a breakdown and do you need to sell? If you have some funds available, should you buy the dip? And there's a couple other, there's a couple of ways to think about this. Let's see here. So yeah, I'm looking for longs. Let me just start by saying, look, nobody knows what's going to happen tomorrow, right? That's just, it should be obvious. I don't know what's going to happen. I'm always here to play the probabilities. This is why I did see that video about how I don't consult any specific models. I'm constantly analyzing a lot of inputs. I'm looking at price action as it unfolds, and I am playing the probabilities. My trades are all just probabilities. The probability is that we, bounce off this level and go to here, and I'm playing those probabilities around the market. It's all I'm doing. I'm not ever certain of anything. I never know when I take a trade if it's going to work or if it's not going to work. I have no idea. But I take every trade in a very structured, systematic way. I have a plan, I have a system, and I follow that system and that plan. All right, that's me. Now you should take whatever you hear from me or anybody else on YouTube or the CTM community, and you need to have your own plan, because my plan may not work for you. Yeah, you may not be able to watch charts at certain times of the day. You may not be able to trade. You may be able to sit in front of a computer and do nothing but watch charts all day, which I can't do, right? So we all have different circumstances and different habits. And a lot of times when I speak out over here, when I'm talking about trades, I'm usually talking about stuff that could develop over days or weeks. And sometimes I'm talking about scalps, but my time preference is more of I want to take a position that I think is going to unfold over the course of days, so that I don't have to be watching the charts every 5 minutes, right? I check on price action every few hours, maybe. I've got my orders set, and I manage it otherwise, right? So now, thanks for the smash the like button there, Monique. So now, what do? Well, you need to come up with a plan, wherever your situation is. But let's give you some ideas. So the scenario might be, you've been holding and you're just holding on for dear life, and you want to know if you need to bail, right? Do you need to bail? I'm going to tell you right now, if you sell now, you're very likely selling the bottom or close to the bottom. We are probably, the odds are we're going to get a relief rally the next day, come up into that trend line and fail, and then do a really nasty quick wick down and back up. That's the That's, I would say, the most likely price action to unfold. And then from there, we're going to go back up. Does that mean that if you've been holding this whole time, should you sell now and hope for this week down? No, because that's not a certainty. That's a probability. I would say, you know, 30-40% likely that it unfolds something like that. I could be wrong. This could be the capitulation that we were waiting for, right? All this side, this could have been capitulation today, and tomorrow we might find support, and we might start to bounce. We could roll over and die entirely, right? But where we're at, let's take a look at a few things, right? And so I'm speaking to the people that have just been holding. They bought, you know, sometime in the last 6 months to a year. Hopefully you're still above your cost average. If you're in the red, I'm sorry. You know, I don't know what to tell you on that, but no matter what, your capital is what your capital is, right? You have what capital you have, and you have to protect what capital you have, wherever it's at, whether it's in money on the side or in Bitcoin or elsewhere. All right, here's what I'm looking at. Look at these moving averages. Yes, we're probably, you know, we're, by my indicators, we're in a bear market. This was my bear market indication right here. So technically, we're in a bear market. I say a bear market. I don't think we're in the bear market, the longer term bear market, because of a lot of other things that haven't happened yet, haven't unfolded yet. I think this is a strong indicator of some weakness for a while, some sideways action, and then this one obviously here too. So we'll see how things play out. But we haven't had a really good relief rally yet. You see here, I'm going to go to a clear chart for you guys. And for you guys holding Bitcoin, here's what I would do. This is not financial advice. This is just how I would look at things, how I would try to build a trading plan, how I would plan what's ahead of me based on where I'm at. So if you've been holding and you're looking at this chart, two things to look at. One, you can clearly see on this chart, clear as day, there's a strong horizontal support coming in right here. Right, we've touched it a couple times. We'll just put it right there. Okay, you really can't lose that level in a meaningful way. You can wick down below it, but you can't close a couple of daily closes below, right around there, or a weekly close around there is problematic. I think we're going to wick down below it to capture new supply in the market and then drive this thing back up. But we haven't had a proper relief rally. You look at these sell-offs. One of the key tells to me, if this was like a poker game, and the market is telling me that this is just a either a shakeout or we haven't really entered the bear market just quite yet. I'm waiting for a more meaningful relief rally. You see this nice gap between the 200. Now, yes, it touched to our we had this initial bounce. This is like, you know, your immediate bounce. Almost always you get a sustained multi-day, even multi-week relief rally after a big sell-off like this. I'm looking at this level right here to see what happens. So we come into that level, and that's going to be concurrent with the most important trend line in crypto. You guys are, if you guys are familiar with conquering the markets, you're familiar with that. Completely agree with Jordan. That's by far the most important trend line in crypto. So my 120 day, interestingly enough, is right there at it. What I think is going to happen is I think you're going to get this capitulation move below, a strong bounce back. And I don't read too much in these where I happen to draw this. I have no idea where the bottom is, neither does anybody else. But I think you're going to get finally your relief rally up in this trend line and the 120-day SMA. What happens here is going to tell me everything that I need to know personally, and hopefully you guys can pick up some tips too about what's going to happen next. If I was holding spot and I was been getting nervous and I'm looking for an opportunity, I'm still going to keep waiting. I'm going to wait until we test this trend line. I'm going to wait until we test this 120-day SMA, and I'm going to see what happens there. Or possibly maybe we really just hit this 200-day SMA and curl over. If that were to happen, most likely the 200-day SMA is going to find its way right on over here to that trend line. So you're going to get an opportunity at this trend line, and then maybe some SMAs at that relief rally. I personally would be waiting for the relief rally. Let's go back and look at something. I'll go back in time. And I don't use the 4-year halving cycle. That doesn't mean I don't consult past price data for some context and to learn. Of course I do that. I just don't blindly say, okay, at this date, last cycle since the halving, it did this, so I'm going to buy. That's not how I play this. I look at this for hints, for clues, and then we go from there. So this is a pretty nasty sell-off, right? And so here's your first bounce. Now, I guess granted, this could have been like the initial bounce from March. We'll go look at that here in a minute. But here's your really bad sell-off. And then here's your relief rally right here. You see it came back into the 120 twice. Let's measure the days. Right, from the top over here to the second. That's 79 days. It's 80 days. 80 days later, you're down 40%. All right? So the problem with selling anywhere, I mean, if we're going into the bear market, we could be right here. And we might still be going down to here. The problem with selling, but I doubt it because we're below the 200, right? It's a lot different. It's a lot different than this. But you get the idea. The safest thing to do is to wait for the bounce and then see how the bounce responds. Because then you know, this is what's going to tell us that we're in the bear market. For me, I talked about this yesterday, there's a subtle difference between a consolidating below a resistance and then breaking through and rolling over at it. Now these rolled over. I'm gonna kind of maybe I should have probably thought about some good examples about how to illustrate this for you. I need like a 4-hour time frame. I'll try to find a good example of this, but we're gonna get a relief rally of some type, and it's gonna look. I mean, just look at this price action here. We're probably the parallel is probably more like we're down here. Yeah, this was a 60%. So initially we had 70% sell-off, and then it bounced back to 40% sell-off, right? So think about that. Just think about those numbers, just not trying to follow it exactly. So you went from a 70% to a 40%. Let's go look at where we're at today. And then we'll try to find some examples of this, what I'm talking about with this. We're at 50%, right? Roughly, close to it. That trend line is going to mess up my ability to place this anchor here. See, we're at 50% now. 50% off of this high, and this wasn't a parabolic top. That's a pretty steep decline for a rollover. This wasn't like a parabolic blow off top and then a sell. This is a rollover and then a massive collapse. So odds are you're gonna have an opportunity to sell. Like, you know, remember that came bounced back to 40%. Let's see here. This was about 40%. Yeah. So you're gonna get at least another one of these. I would imagine you're gonna get a little bit higher than that. And the reason is this wasn't a blow off top. The way this rolled over, your relief rally is gonna be more of a roll into it and back down, right? So that's personally what I would be doing. Now, meaningfully, you can't get meaningfully below this roughly this level right here, roughly 30,000, call it, right? What I mean by meaningfully below, I mean if you close a weekly especially, this is in trouble. If you close a daily below here, it could be a fake out. If you get below this, I would wait for us to come back into this. If this starts acting as a resistance and you see it rolling over, probably we could even watch it like a 4-hour time frame, I would take some off if you need to sell something, right? That's just an idea, thought. If we do that, we're headed for some more downside, and then we might be consolidating between like 20K and 30K at that point. If we lose this level, the other thing that absolutely will happen, pretty much no matter how low we go, is we're going to bounce back up into it and test it as resistance. That's your opportunity to sell. So if we lose this level, your opportunity to sell is when we bounce back up into it. Be ready. I think it's going to be a quick wick, and you know, maybe a daily close below, and then a quick bounce back. And then I would really, really wait for that bounce. That's what I would do. Now, for those of us who have money on the side, let's take a look at comments here. Predator back in action. Better believe it. Been buying alts all day. David, that's... Whew, you're a brave man. Brave buying alts. I would not be. This is why I've been saying this forever. This is going to bounce, right? It's starting to. It's starting to. It's not done. That 57 level is what I'm looking at for a bounce. The bottom, basically the bottom of the summer, DeFi summer. Remember the DeFi summer where everything ran last summer into September 2020? The bottom of that will probably be the top of this bounce coming up here, or somewhere around there. That's what I'm looking at as a target. Maybe 61. Might go a little higher, but Bitcoin dominance is probably going to bounce. So I'm entirely focused on Bitcoin. And I do have some hodl bags, of course. No problem. Lose what level? Monique Johnson says. Let's go back to it. Oh goodness gracious! Where's that chart that I was looking at earlier for you guys? Yeah, it's about 30,850 roughly. With 31,000, 30,000. You don't want to lose that meaningfully. So it's a subtle difference between losing it and losing it meaningfully. Wicking down below it, not a big deal. Closing multiple dailies below it, yeah, it's a problem. All right. So Brandon, I saw a chart today that whales are transferring BTC to exchange. Do you have data? I think that's just the miners in China that are having to relocate. I think that's them. Based on some data I looked at earlier, I haven't tracked down the actual wallet addresses. I will try to do that and post an update on Twitter. But what I saw quickly, it looked like some of the miners that were having to sell to pay for relocation costs. So that may be obviously China just like, you know, they extended their crackdown just a little bit on crypto. It's not as bad as it sounds, but you know, miners are having to move out and they did crack down a little bit. So there's going to be some fallout from that. I mean, that's a real event that's going to drive the market down. Now, you know, people can argue all day long if that's manipulation or whatever's going on, but it doesn't matter. Price action is price action. It happened, and that's what's happening. So, but yeah, that's where that's coming from, I think. So I'm not overthinking that at this moment in time. With alts getting killed, maybe everyone's going to run back into Bitcoin. That's absolutely what's going to happen soon. Okay. For those of us that have funds available, for those of you that have funds available to buy, here's what my game plan is. I will try to buy the dip. See all these levels I've got marked out here. If we go back, let me show you where I got all these levels from. Let me just start with that. These are all Heath levels, Trade Talk. Somebody joked earlier, by the way, that I might be Neo on Twitter. In the CTM Discord group, I think we a long time ago we came up with Jordan's Morpheus. He brought us all out of the Matrix, and then I think Heath is Neo, and then people have dubbed me the Oracle, so I'm the old lady that bakes cookies. Yeah, whatever. All right, but this is where I got these levels from. From Heath, really has taught me how to improve my levels here. You can see that daily where we had this big push up, that first bullish daily candle. The open price of that bullish daily candle, and then the close price of it too might be a level. But right there, that's that area. I mean, you can put a couple levels right there. It was so close. But right at 26.5, I'll call it. That's a support level. And then these other daily candles, similar price action. You know, right after we broke the all-time high, the first like kind of bull flag pennant, whatever that was that formed right there. There's some levels right around that, 23 and 22.6. Obviously, the prior all-time high is a monster support level. I highly, highly, highly doubt we break that. If we break that, there's like something seriously wrong with Bitcoin. It's just, there's a serious problem. But yes, I highly doubt we get down there. But you never know. I'm not going to put anything past the market. These are all the levels I'm watching for a potential bounce. 26, I like 26. It seems like a good like intermediate level. I would not be shocked if we just hold 30, 31. Wouldn't shock me if we just hold that level. I'm expecting kind of that tap of fresh supply and spring. I'm on a Gemini feed. Gemini, you know, wick down that initial sell-off down here to 28,787. You can see that trend line, which this is the prime trend line this came off of. You can see, interestingly enough, that exact level. That's the prime trend line through there. If I draw some touches over here, that it hit that exactly that right there. I do expect us to wick down slightly, at least slightly below 28 to get that spring, to get that fresh supply. And if you break 28.7, the next real level, you know, the real strong level is 26.5. It doesn't have to hit 26.5 exactly. Just anywhere in this range, this is going to be a fresh set of supply coming into the market right here. That's where I think we end up for a wick low and then a bounce. But, you know, I don't know. I'm not actually the Oracle. I don't know that. That's just a guess. Okay. My game plan though is, you see all those levels I'm watching. I got a bunch of them. You see that fuchsia pink? I don't know. I'm terrible with colors. I'll just call it pink. This very bright line. I made it so bright for live streams and for Twitter, so everybody could see it. Basically, I'm just watching for that to break. So, you know, all I'm waiting for is one of these support levels to hold for us to get a bounce back above this, and then might consider taking a little piece on a break. And then another piece that comes back into one of my support levels, and then a CTM signal taking another piece, and then building back up a long spot position. This is just spot positions, not, you know, no trades, just buying spot. But yeah, so it would look something like this. So say we hit 28.7, right? That wick low, and that's where we bounce, right? So you get this strong bounce, get this, you know, All right. So then what I'm waiting for is a break here. So I will probably, if we actually were to break down at 28, I'd start maybe buying little pieces of the dip here. But then I'm really waiting for this to break this trend line. Maybe buy a break, come back into the next support, and then buy a CTM signal post breakout. That's what I'll be looking to do. Obviously, keeping tight stops under this whole line. This is a very steep trend line. So the problem with these trend lines is that you can get on the outside of this and still continue down, right? So you got to just manage your risk accordingly. So you just got to start kind of sniping scalp entries out here. But that'll keep me, so basically that keeps me from FOMOing in and just trying to randomly catch the knife at who knows what level it actually go to. That gives me some confidence that we're getting a bounce and we're on the other side of that, and we're into the relief rally. So for me and for people that have funds available, that's playing the relief rally. Now, what am I looking for? What is my trade? I talked about it in my video yesterday a little bit. My initial trade idea, you know, let's say this becomes the bounce, right? And let's say I, you know, end up taking a breakout right out here. All right. So my trade idea would look something like this. And I treat all these as trade entries, right? So I want to make that kind of point clear. So say a tight stop right there. We get outside this. I'm looking at just an initial take profit of just 35, right? To be safe. And then I'll see what happens, because that trend line happens to be right there too. We got this other trend line that we got to get over. You see that trend line right there? So that's an interesting trend line to watch too. So I'll be careful taking entries. You know, if the entry actually ends up being close to this trend line, I'll wait longer, right? And I'll wait until we get over here, right? I'll pay the couple $1,000 insurance policy to be out to make sure that I'm on the right side. I don't want to be buying into resistance. But if I get a good clean entry down here at 33.3, say, whatever this white line is right here, if I get a good clean entry right there, right, coming into that, maybe a support, or that's where the breakout happens to happen, something along that, my initial take profit will be up here. My stop loss will be if we break down below whatever the next level is, right? And I will play that scalp, and I'll keep adding, you know, positions as we get out here. And the hope is that we actually consolidate underneath this and then break out and continue on. I can keep riding that trade. Maybe I take a little profit and then re-enter on the other side, so forth and so on, just manage it on the way up. What am I ultimately looking for? Let's get to a clean chart. I'm looking for that relief rally. I'm looking to see what happens when price comes into the 200 and really whatever interesting level is closest to the 200 at the time, horizontal level and or trend line. I'm looking to see if it breaks that, I'll add more for the run to the 120. And then I'll see into this most important trend line. And then maybe I'll take a little profit here. If it starts to curl over, I'll take more profit. If it looks like it's consolidating underneath, it's like bull flagging underneath it or something like that, then I'll just wait it out and then, you know, trade a breakdown of whatever structure forms there. And if we break above this, I'll be fully invested back above the 120 and this trend line. I might even personally, it's just not financial advice. I might be fully invested before that when we take the 200. If we retake the 200, we're back above it. I might be fully invested. I might actually start doing lightly leveraged over here, but that's just how I might handle it. Now, don't, you know, not financial advice. All right, but I'm just looking to play the bounce right now because I know we're going to probably get a relief rally, but I'm not going to, you know, bet the farm on it either. If we break, if I try to take entries and we keep breaking down, I'll have to take a small loss and keep watching. So that's where a couple ideas, right? Just a couple ideas. I think you should not be doing any lightly leveraged until we get outside this trend line up here and the 120 day, and we really clearly are back in an uptrend. So, all right, let's look at comments now. Hi, Timothy. Oh, you're welcome. Glad you think the plan is clear. ADA seems to hold the best today. Yeah, ADA's. I've just been hesitant. I've been so focused on Bitcoin and not alts in general. I have, you know, ADA is my second largest position. I really want to add back to Ethereum here pretty soon, but ADA with Alonzo coming on. Sorry about that. When Bitcoin bounces next, ADA should really fly. I think we'll see. Definitely worth watching. When we get some solid, well, you see here, look, it's coming to my very bottom trend line right now. Interesting. This is my break this line to get interested in ADA again for trades, right? That line right there. There's my. I'll start making all these pink for you guys. So you can clearly just see my. I needed to break that for me to get interested. Ethereum, you know, similar thing. I think Ethereum's going to hit ding 1400. I will be a buyer at 1400. Just that's a worthwhile place to try to catch the dip. And then there would be my, you know, trend line. Well, I'd probably do like a 4. I'd get a lot more accurate. I like that trend line. I mean, it's steep. You know, this is pretty steep enough. I don't need it to be any steeper than that. But these, like, just playing it like this and just waiting for that downtrend to snap, it's going to keep you from just, like, getting chopped up all the way down. You know, it forces you to wait and be patient. And that's the name of the game. Just, you know, the one thing I've learned in trading and investing in general in my 8 or 9 years now of doing this is if all you do is sit on your hands and just wait and wait and wait some more, things will develop that you didn't like. You know, as things are developing, if you just wait and wait for that little more clarity until it's just crystal clear, it's like, as Warren Buffett says, a fat pitch. When it's like just an absolute no-brainer, then you strike. It's really the name of the game. You have to either manufacture ways that force you to wait. And so for me, like things like putting this trend line, waiting for it to bounce back above that, you know, that forces me to wait and just wait and wait and sit on my hands until something becomes clear. All right. So Brandon, your base case is wick into fresh support. Yes, that's my base case. Do you have a Fibonacci speed fan tool in TradingView? Check out the 12-hour peak to recent lows. Seems to line up. Yeah, I mean, I have it, right? I think it's... When you say the fan tool, is it the spiral or the circles? The fan tool. I thought you meant the fib spiral, but is there something else called the fan tool? I gather this is what you mean here. Where would you anchor that? On a 12-hour. Not sure what the... So when I anchor, like, I don't use this tool very often. No, get off my screen. I don't ever use this tool, but you can do it from the top to the bottom of the sell-off. It's not gonna work. Yeah, I don't know. I don't know how to use this tool very accurately. I've always thought it was like, so don't you anchor these from a low point, basically like the same as a fib retrace on the 12-hour. I don't really know. I've never used this tool for any sort of accuracy. Is that the right tool? Anyway, I don't know. I'm gonna skip that because I don't know. I don't know anything about that tool. I don't use it. How about ADA? Should I hold my ADA position for long term? I have a position I'm holding. It's my second largest, of my long-term hold positions that I may never sell that ADA position just because as a stake pool operator, I need that. So that probably won't ever be sold. But I will add to my ADA position for tradable positions here soon, possibly. But yeah, I mean, it's up to you. Holding ADA right now, as it might go down more. Maybe as low as 39 cents, 40 cents is the lowest possible price I see it going back to in the bear market. But it can go as low as, that's what I came up with anyway for some reason. Yeah, 40 cents roughly. I mean, it can go as low as 40 cents. But holding ADA now is a lot like holding Ethereum somewhere over here on the chart. Yeah, it looked pretty bad for Ethereum over here when it dropped from, it's like that video that guy did. And then Bitcoin dropped from 200 to 30, and then it went up to 1100 and dropped. So yeah, Ethereum dropped from 415 to 126. I'm sure people that were holding Ethereum at 400 thought this was pretty rough, but then look what happened, right? So holding ADA now is about like that. Just you're probably close to the bottom of whatever sell-off we're in. We're probably close to the bottom. And how we know, I'm just going to reemphasize this, how I will know that we're in the bear market, it's not all these death crosses and everything else. It's how the bounce reacts. This right here. All right, here's that. Here's our downtrend. Here's a example of a downtrend you could have played. Well, and this breaks right here. So this has how I would have played this. Maybe a little bit on the breakout here. You see this structure here, and then a breakout. That is a break of this. When you came back up into here and it rolled over on you, and how I got, let's see, I have to go like a lower time frame. If I do that, I'll mess up my chart. But I'm sure if you put on the chart here, right there, see that? I mean, there's just a level. You can go find a level somewhere. It's probably, if I put the 120 or something on here, I guarantee it's somewhere around there. Yep, there you go. So the 120, you lost that 120 level. You broke this downtrend. This is a good opportunity to play the bounce. It's exactly what I'm talking about right now. This is just pretend that this is the Bitcoin chart you're all staring at right now. This is the line I have on there. Something like that, right? And then you get on the other side of this, you play this bounce, and what you see happen is you break the 120 and you come back below it. This is where you roll over right here. You see these daily candles where it's consolidating below? The problem is it went above and then fell back below. This is consolidating below to go back down. When you lost that second candle right there, when you lose that body or maybe the wick price right here, that's your signal. You got to get back out. So the worst case scenario, you would have had an entry here and out there. This little play that little relief rally. Then the bear market's on, because now the 120 is confirmed as resistance, and boom, market's over. That's when I'll know it's the bear market. If we come into it, we have a pattern that looks a lot like this. Fortunate that we found this Ethereum chart here, but this is what turning over, coming into resistance looks like. Let me try to find something that's a consolidating into resistance type of example here real fast for you. Typically, you find those in an uptrend. There's some resistance. There you go. There's a good one. All right, you see this level, Dell's level right here. This is an example of consolidating below. And this is to me a tell that you're going to break through. All right, so what you have here is you have an attempt, and you set a high, you sold off before you reach that same level. That this is a daily close, the daily closing price right there. You didn't quite get there, sold off, so you're forming some consolidation. And I bet you if you put a pattern on this, I bet you at the time was this 20, I probably was watching this exact pattern. Right, we were probably watching this pattern, and you broke that pattern into that level, and then you bounced below it. But look at this. This is the tell. This is the tell. This low right here, it was higher. Hold on. This low was higher than this low. This high was higher than this high. That's the tell. This is consolidating underneath. And then you broke through, but you didn't, you maybe had like one daily close. It wasn't super significant. And then you came back below, but you put in a higher high and a higher low, and then boom, you had your big breakout. This is a telltale consolidating beneath and not rolling over. It's a series, basically it's a series of higher highs and higher lows, and you maybe barely peak above it, and then you resume up. But you don't ever take out the point. You're wrong for a certainty is if it rolls over. Firstly, if this first attempt right here were to have rolled over and taken out this low right here, then you need to get out. Secondly, when the higher low was made, when this same thing, if that came over and rolled underneath that higher low, then you need to get out. That never happened. It kept marching on up and broke through. So that's kind of, to me, a couple of tells about how you can tell something's consolidating below. And it's not 100% foolproof, obviously. It's a nuance thing, but that's what I look for. It's exactly what I look for. That type of behavior in the price action, to tell me, is it going to roll over, or is the probability that it's going to break through versus it's going to roll over? It's never a certainty. This is a probability, but it also gives you actionable intel. Hey, look, I came up into the level, came close, make a new lower low than that, and need to get out. Boom, I hit that level. If that got rejected and came down below that low, it's out. Time to get out. It's coming off. It made a higher low. And then a higher low. Boom, boom, boom. All right, there's a tell for you. All right. Oh, hey, I got a super chat here. SYLO. The crypto investor asked about the SYLO. Let's take a look at it. I haven't got to look at some altcoins in a while. Let's go to the day, auto. I don't know what this is off the top of my head. This is against USDT. So in general, just general trading, I look at this chart and I go, okay, we're basically back to sideways right here. You had a nice bottoming pattern and a huge breakout, and now you're back to sideways. So in general, it's going to be hard to get any tradable intel. You have, you know, I'm sure if I go, let me go to the really low time frame here. All right, you're putting in a little bit of a pattern. So I see there's obviously support. It's sitting on support. That's good, right? You're sitting on some clear support right there. Let's go back and see how that support looked in the past, though. Yeah, it's a really good level. It's a really strong level. It's, my goodness, this is a very small, whatever this is. A fraction of a penny, 0.004 roughly. That's the first thing I see. Those highs, you're coming back into it. You're holding it, good. And all this sell-off we've had the last couple days, it seems to be holding up pretty well. I bet the Bitcoin chart looks pretty good. On the 4 hour, here's the other thing I see kind of clearly. I see this pretty nicely. Something along, you can see that right there. I bet stinking trading view changed something. All right. So there's a really broad potential level. Yeah, this is not going to be these. It's such an illiquid asset. These trend lines are not going to be super actionable. I look for patterns more than I look for trend lines on alts. But this is what I kind of see here, and you may be having a shot at a trade idea would be coming as you come back into this support level. You could try to take a trade as you're range bound, right? So it'd be a small potential win up to, you know, 0.4 or whatever, 0.45 right there, that daily close right there, and then hopefully you can push it up to this trend line, and then hopefully you can keep pushing it after that. That's, if I was really wanting to get in on this asset, that's how I'd treat it. I'd try to buy coming into that support. The other thing I think you could do on this is really illiquid and hard to trade. It looks like probably. If I can get this done right, a break of this level, that daily right there, it's gonna send you up. There's another Heath level right here in this. You see this interaction, this daily one green candle right here. There's your next resistance, a Heath level resistance. So another trade idea would be if you close a daily above this level, 0.45, you could probably take a trade right into that trend line and 0.0053. Ultimately, then hopefully if you get in either coming into that support or coming to that support or break out of that whatever, the hope would be that you consolidate under this area, break through, and then on you go. And then you have a really beautiful trade, especially if you bought coming into the support, or maybe even buy into this support after breaking it. The safe play would be buying out here. But if you want to try to do some scalps on the way up there, that's how I would deal with those scalps on the way up there, just to try to build myself a position, and hopefully you can take a scalp off of this and ride it all the way through and out. That would be a beautiful win. Those don't happen very often, but they happen sometimes. So that's what I would do. Hopefully I answered your question there about. Oh, let's take a look at the. I don't know what it is though. It's a fun little detour and just talk about it. It's not a really tradable asset though. That's the only problem. You're probably gonna have problems with liquidity on it. It's a decentralized communication data exchange network powered by layer 2 micropayments. Okay. Layer to layer. It's a kind of a layer 2 hybrid thing. Cool. Thanks for the question. All right. Back to Bitcoin. Remember to give the likes. Oh, thanks for the likes. Yeah, it was a bunch of lines shooting out. I'd share it if I had it. You're welcome. This is all gold. You're welcome, Colin. Hey, what's the best time frame to catch consolidation for rollover? Is it 1, 4, must be 8? I actually look at the 1 hour, to be honest with you, on just like looking at what's happening coming into an interesting level. I'll go down, the lowest I go is the 1 hour. I don't like going down anything lower than the 1 hour. It's only for entertainment. If I ever go to the 12-minute, it's just purely for entertainment as things are bouncing around. That's my lowest time frame. I don't ever use it. 1 hour would be my lowest time frame to really try to get high fidelity, see what's going on with the price action as it's curling over. Ultimately, it's for me, it's the 4 and the 12. I flip between the 4 and the 12 on crypto. I don't really ever use the 8. 4 is highly accurate. 12 is where I want to be. 12, like when we're in a trending market and I'm trying to, take trades. Okay, if we're in price discovery, I'm all about the 4 hour because it's how you catch most signals and most like patterns and breakouts of patterns and stuff. But if we're in a sideways market or we're looking to break out and like this right now, I really want the 12-hour signals, right? So I really want to be trading 12-hour signals. That gives me time to build up confidence that we're heading in the right direction. But for the rollover question, yeah, the 4 hour, most of the time I'm just watching the 4 hour to see how things react. But if I'm really wanting to be accurate and I'm really, I think it's a really important level to watch, then 1 hour. For that, that type of thing. Good evening, Nick. Anybody else have any questions? We're light on questions tonight, interestingly enough. Is everybody still out there with me? Did we lose the stream or something? I think it went dark. Do you have the speed fan tool? Why didn't we get a relief rally so far? It's only going down. So Mindy, that's a great question. Thanks for asking the question. Why haven't we gotten a relief rally so far? It's only going straight down. That is another tell to me that this is probably more of a shakeout than it is a bear market. And the reason I say that, when you have a normal bear market, when the Nasdaq's been very bullish and it starts to roll over, you have this interplay of this natural bouncing that occurs, right? And this rally that occurs. Let's look at the Nasdaq. Y'all remember this mega sell-off that we had? You can see all these mini relief rallies all the way down. I'm on the daily right now. Let's go to like an 8 hour. I guess I don't know if that's really going to help. But yeah, you see how much we bounce. It wasn't just like solidly down, consolidate, and down more, right? It was down, bounce, down, bounce, down, bounce, and then bounce back the other way, right? And you finally found a bottom. Now compare that, and maybe the analog is this more kind of just like peaked and fell. All right, let's go look at Bitcoin. And this is Nasdaq isn't nearly as volatile as crypto, obviously. It's a similar analog. All right, so check this out. Now, we had a very strong run up, but you see all this, how much consolidation we had here? And then it just went... So, a normal sell-off, you should have had, to me, it should have done something like this. If you were just going to go down and be down permanently. This feels like I don't want to call it engineered, but it feels like an engineered sell-off. And it just puts you right back in this. You see how I have the red and the green lines? It puts you right back in that zone. It's so interesting. I mean, we went straight to this area right here. Like, just this one itty-bitty little shake. But on a daily time frame, it was like 2 days of consolidating right here on the 120. That was my 120-day SMA, by the way. We lost it. Consolidating under it gave us the opportunity to exit. But it was pretty much straight down into this box. I don't know. I don't believe in broad market manipulation, but I believe in I'm going to share something else with you guys. If this is Wyckoff distribution and Wyckoff accumulation, I think Wyckoff works more because of human psychology and less because of manipulation. I think this is just how the psychology of participants plays out. And it's probably maybe engineered to help it, move in these directions. But I think this is more human psychology at play. But nonetheless, this very quick sell-off right back into this box, basically a relief rally should have taken us back out of this box for a couple of days and then back down. Right. So if I was to put it as simply as I can, we need to, for a proper relief rally to tell us that we're in the bear market, we really need to get a relief rally outside of this and then fail. Then we know, all right, the bear market's on. But because we came straight into this box, I'm waiting. Oh, this is what it's just what I expect. It's just when I see this, I just say, okay, this is a shakeout, consolidation. It can go either way. Obviously, we're in this box. In theory, any asset, it could go down. Absolutely. Something fundamental would have to really break other than Chinese FUD, you know, China regulation. If the UN came out tomorrow and said, you know what, for the sake of saving the planet and global warming and this, that, and the other, we're going to tax anybody who holds Bitcoin a flat tax of 20% for a carbon tax, and we're going to tax every Bitcoin transaction, or any proof of work crypto, anything that uses proof of work, we're going to carbon tax it. That would murder. That would absolutely murder the price. Now, it wouldn't murder the protocol. Technology would continue to run, but it would murder the price. So something like that, you know, an outside threat. And this is why, you know, always mind your downside, because something like that, in theory, could happen. Is it likely? No, but it could happen. So, yeah, this box can break down, and we can go into a real terrible bear market. But just this right here is a tell to me. How fast that came off without a bounce. Something doesn't feel right about that. And I still think the bounce is coming because of that. This is just market dynamics at work. That's my opinion, but I hope that helps. All right, thanks, James, for the stream. Good. So Nick, is that Mindy, I think, or something like that? Asked that question. Mindy, did that answer your question? I hope that answered your question. Exactly, Mindy. Yes. 20K to 64K went too fast. Let me show you. If you go back, if you guys are just joining my stream, go back to January. Go back to January and see what I was saying about this. See how you can tell. I mean, I was nervous as all. I was like, what is going on? This shot out of the cannon way too fast. And when it sold off, if y'all go find my live streams from like the 13th through early February, I was so happy we were at least consolidated here, because I was worried. It's like, oh my goodness, are we gonna get a blow off top just out the gate and mess up the rest of the bull market? So I was really nervous. I was super nervous as we broke 30,000. Like, this is way too fast, guys. And when it started consolidating, I was like, all right, I feel better it's consolidating, and then it shot off like a cannon to $65,000, which also made me nervous. Y'all, go back to my February live stream. I covered. This move right here made me super nervous. We happened to catch some on-chain analytics, and I closed a lot of my trades right as we came off this peak right here, and we closed a bunch of profitable trades and got back in $47,000 right there. Not quite the bottom. Yeah, 47,000 is where I got back in on both alt and Bitcoin. But that's because these moves made me so nervous. They were too fast. And I kept measuring them on my let me just show you all this. But yeah, go back January and February and just get this. I mean, I was obviously excited Bitcoin was going up, but I was also super nervous. And when this started consolidating, I was almost elated, happy on my live streams. All right, that it was selling off, because that's what we needed to do. It was healthy. But to your point, yes, it came up too fast, and now it's going to roll over. It's gonna roll more to the downside because of that. So it's just natural. If this is the sell-off, and then we resume up, it's going to look like that, right? It's just going to be an analog, a nice sine wave analog. Probably, if I drew a sine wave on here, you'd get it. Let me go to my BLX chart. Where'd it go? It's out of my way. BLX. Now, this is my log chart that I use, my long-term log chart. I kept measuring. I had a boxes on here. I guess I don't have them anymore. I had these, boxes measuring, and I kept comparing the last cycle, date and time boxes, right? I was like, all right, I kept measuring from the halving to today. We're up 500% in 283 days. So I would go over here and be like, all right, let's look at what it did last time. Just as, from the halving, it was up 500% in 283 days. So that made me super nervous that we were so much ahead of the last cycle. Like, man, we are way ahead. Easy monetary conditions, the Fed, it somewhat made sense, but not that much. I mean, there wasn't that much money printing. There wasn't, we didn't triple the money supply. We increased it 30%. So that made me super nervous, and I kept talking about that. This is making me nervous, like way over. So I always in the back of my head expected a really nasty shakeout. I said it. We'd be down for months I mean, I said it multiple times. Go back to this time frame. I was saying, you know, as we were coming up, as we were making this huge move, I kept saying, guy, like at some point we're gonna have a nasty 40% plus multi-month shakeout. It's gonna happen, and here we are. This is it. This is what's happening. So yeah, I'm not shocked by it at all. I did draw this, interestingly enough, on my video yesterday. You see this is my log chart. We'll stick on this chart for just a minute to talk about a few things. This is my trend lines I have in my log chart here. Now, I don't use log charts for trading. I take trend lines and any analysis done on log charts with a grain of salt. Really, why I have this log chart is not for any sort of trading. It's just to study the effects of the halving and historical price action on Bitcoin, kind of this natural metronome that you see with price action. You can see between the cycle lows, or the bear market low and the high, and the low and the high. Interestingly enough, if you knew nothing about the halving, you could almost dead center the low to the high right around the halving. You know, if all you did is took the low and the high and you put a line at dead center, it'd be within a couple of days of the actual halving. So that's super interesting, right? So studying that sort of effect and price action, and studying and back testing these SMAs like I have on here. This 120 day is my main SMA. You can see how it cuts through that price action so accurately. But the other thing, interestingly enough, you know, when we started the sell-off, when we lost the 120, especially right there, when we lost the 120, I said, okay, I think we're in a hybrid double wave, right? It's not going to look exactly like 2013. It's not going to look exactly like 2017. It never was. But we might look similar. So what I did is I said, let me draw a channel showing this price action here as the first peak and see what we get out of that, right? But I wanted to anchor it. Instead of anchoring the price at the top or the bottom, I wanted to anchor it on this midline. I wanted to find the most accurate. So there's some price action here. It's on the 3-day. I'm going to go to the daily. You see this? I anchored it on this little bit of a bear flag as we did right before we broke down the liquidity crisis. So that bear flag is the anchor there. These points here, you know, are the next points. Then this, after we broke the all-time high, the first, or I guess this little bit of consolidation here, and the January sell-off lows, and then the bottom of this price action here right before we snap down. That's the midpoint that I plotted on here. Interestingly enough, is that if we get that wick down to the 20s, it'll come right to the bottom of this trend line. I don't use, and I also, by the way, discounted. You see how I drew? 1 second. Let's show this. I also anchored the bottom, not on this wick, because this wick is very subjective depending on what feed you look at. This was just obviously liquidity. This second one is far more accurate. So this was after you get your first bounce. This second one makes a lot more sense to anchor your charts on if you're using this bit of price action. This came in on the 16th of March. It's a lot more accurate because it was a lot lower volume than this massive sell-off wave coming in here. So it's a more accurate price. So that's where I anchored it. So anyway, interestingly enough, we may be coming into the bottom of this channel that I've got drawn on here. Again, I wouldn't use that for trading advice, but it's interesting to watch. But I brought this up to your point about, you just look at this price action, see how much time we spent, you know, in this log chart above the midpoint. You're probably going to spend a commensurate amount of time below the midpoint now, right? Consolidating. So we may be putting in the low here pretty soon. I think this week is likely, probable to be the low. If it's today, if it's later this week, we still have the GBTC unlocked to come. So I'm kind of expecting a bounce tonight and tomorrow, and then some weakness Wednesday, Thursday, and that to be the bottom. That's what I expect. But if we actually come into the bottom of this and then resume off, that would be interesting. Now notice this. Notice this. The top of my trend line, the very top of this, on the date that we have measured as the likely cycle peak date based on our historic metronome. Let me go to the 3-day and show you how I came up with that date. Came up with that date. It took from cycle low. Here's the cycle low over here, $3,000 on December 2018. I measured from the cycle low over to the halving. That's 511 days. And then I took that out slightly less, a couple percent less, because typically it's been a couple percent less as an estimate, but also to put us an early estimate, which puts us December 22nd, or September 22nd. So late September. If this actually were to play out, the very top, and then, I'm going to move this out just a couple of days. I think that's a couple of days too early. Let's say the 28th of September is probably a little more accurate. That's $146,000. That was actually, if you look at stock to flow's initial work, and then a lot of estimates people had, 140,000 was right at the peak. It's not inconceivable that we bounce and go right into 140,000 by the end of September, early October. And it's also not inconceivable that if this bull market goes all the way through the end of the year, that we do something. 288,000 I think is not out of the cards either for the end of the year. By the way, if the bull market goes through into 2021, I think 288 is on the table. And that's just why do I think that? I'm way off on a tangent now, but because I was trying to very unsuccessfully trade this 2017 market, and I learned here to never doubt. I mean, if you were around, if you were with me trading this was madness. Like I did not know what was going on. I could not fathom some of these moves that happened. I'm I don't know what's happening, but we were trying to play this, and I kept selling these big pops. I just sold way too early, and I just saw it ramp, way out on my face. I was probably fully out of this thing. I think I was fully out of Bitcoin in 2017 at like $2,000 or something. I'm looking over here trying to remember. I don't remember. But this taught me, don't underestimate. Some of these shakeouts are pretty vicious too. It's worse, and living it was worse than you think. But this was a much more even ramp up. This shakeout's worse. I mean, that's the other part of it. This shakeout's actually worse, but that cycle taught me, and especially trading Ethereum. I was trading Ethereum a lot. That cycle taught me, don't underestimate the market. It's crazy stuff can happen in crypto. Let me take this off a log. It's also, yeah, it's making it look less ridiculous. It was absolutely a ridiculous time. Where was that at? Yeah, this was bananas. I mean, this was absolutely pandemonium trying to trade Ethereum, and I'm a long-term value investor trying to trade crypto. Like, what is going on? I'm used to things moving 10% in a month. At most. Like, that's a big move, 10% in a month. This thing would move 20% an hour. It's crazy. So anyway, point is, don't underestimate a bounce back. If it does bounce back, there's a lot of things that are possible. What we got? What's going on here with Bitcoin? All right. Do you think we'll continue to follow 24K support? What are your thoughts about ICP? As long as we go up slowly, it's all right. All right. You're welcome, Mindy and all. Do I think we continue to fall? My base case, again, is that we get some strength. I'm waiting for this, fuchsia, pink, whatever you want to call it, trend line to break to the upside at this point to take an entry. I will try to catch a falling knife. What would you say, 24K? Yeah, I mean, it would be worth trying to catch a falling knife there for a little scalp. Because where you're wrong real fast, right? If it doesn't bounce strong off of that level, you're wrong. The other thing about all of these levels we're looking at, every single one of these levels, including buying today right now into the 30, if you bought coming into 32.8, price is going to bounce back up into it, tested as resistance. It's like these are all going to get a short, you're going to, if it does break down here, you just got this bounce here, this is going to bounce just like, it's going to be like a totally predictable bouncing back into those levels. If you buy coming into that level, you're going to be able to sell as it bounces back up into that level. Like 9 times out of 10. So, but yeah, I mean, what was that? I don't know. I was losing my train of thought. I'm starting to get kind of tired here. Elon wants to avoid taking responsibility. All right, so I got somebody 60K to 30K was too fast too. It's going to be volatile for a while since the media is still talking daily. I believe we see a 50% recovery than actual fall out of a bear market unless news is out. Yeah, what almost always happens, this comes from experience. I follow the charts. I trade the charts. Almost always, when sentiment starts to turn around, I don't know if I think a lot of it's just people start looking for good news because the price is going back up. But it's just a flood of bearish news when things are going down. It's a flood. it's ridiculous how it works. But I guarantee you, if Bitcoin turns around and starts making 35, 38,000, all of a sudden all these bullish articles are going to come out, and some company's going to announce they bought Bitcoin, and some other bullish country is going to do something, and then El Salvador is going to say one thing that people have been poo-pooing off this whole time, and they're going to think it's a big deal, and boom, sentiment changes. Just how it happens. When it starts to recover, everything's going to get bullish again. All the sentiment's going to turn, and boom, price goes up. That's just what happens. All right. But 24K support, it's worth, if it were to get down that far. I don't think we make it that far. That's not my somewhere between 28 and 26 would be my ideal target. But it's worth trying to catch a falling knife, and it's worth taking a shot at buying the dip here, because it's that same philosophy. If I buy the dip in this range, if we actually get down here and I buy the dip in this range and we actually go down further, I know with a high level, this would be a spot purchase, probably wouldn't actually put a stop loss on it. I'd have a mental stop loss on this type of thing. Maybe not recommend that for everybody, but if you know what you're doing, you can do it. I'd have a hard stop at like 20, down here somewhere. But I know if I buy in this area, it comes in this area, and it doesn't bounce hard, I need to, next time we lose this level and we come back up into it, I just need to go ahead and get out, right? And hopefully I just get out roughly at break even. But to me, these type of trades are almost free trades, because it's gonna, if you buy in at like 28.7, right, this level right here, which is that wick low, if it breaks down further, it's just gonna bounce off that, come back into it up, and then come back down. And if it doesn't, you have your absolutely I must get out here, right? If it just keeps on trucking down, you do have a level that you'll have to just take a full loss on. But the idea would be is to short circuit your stop loss. So you're gonna still have I would still set a hard stop loss for spot purchases. Depending on where you're holding that, it's kind of hard to set a stop loss depending on how you bought it. Just so, but I'd have a hard stop loss, maybe below all this stuff under here. I have it just something happened and Bitcoin got hacked or some crazy nonsense and it just tanked like that. I'd be out over here it'd be a nice little hit. But I'm going to try to short circuit that. So if I bought here in this level, I would short circuit my stop loss by waiting for a bounce back up to that level and getting out manually. So that's how I manage that. But yeah, anything below, I did the wrong box. I'm sorry guys, down here. This is where I meant to draw it. Anything below that wick low right there, 28K, I feel fine buying, because I know it's going to bounce back up into it as tested as resistance when things get real volatile down here. All right. So I got a bear chart here. It depends on what slowly is to you, because potentially 140K by September is fairly fast. Oh yeah. If we hit 140K by September, it's going to come screaming out of here probably late July. Here's how it could play out. Let me just show you all this. I said people were earlier if you think you can hit 288,000 by the end of the year, you're basically crazy. I'm like, well, let me ask you, how many people, if I told you on March, 16th back here when Bitcoin was, barely $4,000, if I told you that within a year, March, yeah, Bitcoin would be at 65,000, you'd think I was crazy. There's no way. There's no way from 4,000 to 65,000 in a year. Well, it did it. It's right. Look right in front of us. And two, a bunch of us were probably a little bit overly enthusiastic about this breakout. If I told you in this breakout above this high right here, we had this nice little breakout, that Bitcoin was going to come crashing down to $28,000 in a matter of a couple of weeks, you probably also be like, nah, that's crazy. So don't it's just, nobody could have seen it going from here to 65,000 that fast. Nobody. There's a lot of us that were really bullish, and we thought maybe, initially we were maybe 140 by September, but 65,000 by April, no. So don't underestimate what it can do. It can do a lot of crazy stuff. But yeah, 140,000. Oh, I got off track. I'm so sorry. Yeah, 140,000. Let's go to a clear chart. Let's take a look at what that would look like. All right. Where's $140,000? There you go. All right. So we went from 10,000 in October, roughly, right? 10,000 in October, It's short order to 40 something, and then to 65,000. And now we have this rollover. So if we consolidate here and then break out, right? June, so I think we'd be testing, by the end of July, we'd be testing the other high, break out the other high, test 100,000 by September, and then a blow off top, and then back down. And then your proper bounces and your sell-off. That's what it would look like, something like that. It's not, now just remember, if it did this, everybody goes, oh, it's 100. Yeah, if it were to hit 140,000 by late September, this is a blow off top probably. This is because some bullish momentum, some big company, Apple or Google or a couple of them, something like that, bought something unexpectedly bullish happened. Besides El Salvador, that was a big deal, but people seem to be poo-pooing that off. But if Apple, Google, somebody big bought, Amazon bought Bitcoin, and there was some other bullish news associated with that, it would cause a frenzy like this, right? But this wouldn't last long. Look at how much time, how much volume under curve here. It's a very short period of time that Bitcoin would be actually trading, and it would quickly come back down and slowly bounce its way. You'd have these relief rallies and bounce, slowly bounce its way back down to where we're at now. So if this happens, whatever happens will be a short-lived blow off top, and then we'll come back to kind of a normal trading range. And most likely, these levels we're putting in now, somewhere in here is going to be your new low. Probably given this price action, right about there. About $40,000 makes a lot of sense. After that blow off top. But we have to get there first. We could absolutely, this could have been an early peak because of easy monetary conditions and irresponsible leverage long trading. And this swiped out all the retail, and now we just go on a prolonged year or two long institutional accumulation phase. That's 100% possible. But nonetheless, we should get a relief rally at some point. Something bullish is going to happen that causes a little bit of a relief rally, most likely. All right, comments. I'm going to wrap up here pretty soon. We're going a little over an hour. I don't understand whales I would have sold. They have a lot of coins. They only need to sell a very small amount to make a lot of money with how much they have. Brandon, if it does go up parabolic 140, do you get the chance to sell? Yeah, absolutely. All right. Yeah, if it here's a blow off top that we sold the very top of. I don't know if you just started watching the channel or whatnot, but yeah, let me show you how I managed to get the very tippy top of Ethereum. I got it on Cardano too, but Ethereum was a little bit better work. I've traded, my most accurate trading has been on Ethereum this whole market cycle. I've just been all over these moves, it feels like. I've been trading in and out of it pretty accurately with a small amount. The ETH BTC trade, my biggest trade of the year was ETH BTC. I had a really tight stop loss and a big position, and I caught a monster breakout on ETH BTC, and I added a lot of Satoshis on that move. That was my biggest trade of the year. All right, nonetheless, let me go to so here's what I did. And then I'm going to wrap up after this. I did a fib extension, so I think what I did is I used a weekly level. So I drew this low, this high, this low. Yeah, there it was, something like that. There you go, almost exactly. So I did a weekly fib extension based on that, darn trading view, that last move right there, that weekly move. And so I drew this fib extension level. Now I go to the really low time frame now. So once I had that fib extension level on there, I actually think when you dial it in, yeah, it came out the top. Yeah, it peaked at the top. So I had dialed it in like that. Whatever. It was about like that. It hit the 4236, the very tip top. All right. So what I did is when Ethereum started this insane launch, I simply put these fib levels on there, and I drew on this launch angle. When we broke out of this 1618 level, we broke out, had this mega launch. I just drew, same thing I'm doing now in reverse, right? The same thing I'm talking about right now, just in reverse, exact same thing. Drawing a trend line and waiting for the break of that trend line off of a support level. So instead of waiting for it to hit resistance and come off that resistance and break this trend line, we're doing the exact same thing. But this is exactly what I did to catch the top of Ethereum. So Ethereum made this big move. It literally went off my chart. I mean, it went off the 4, whatever that top fib level was, 4236 level, and I sold some there because that just was ridiculous. This is a blow off top. This is your typical standard blow off top. And then when we lost that level, we lost both the 3618, right? Yeah, 3618. When it bounced back up into it and tested this trend line and rolled over, right there I sold roughly $4,000. I sold pretty much all my Ethereum, except for some I have in a hardware wallet that I'm never gonna sell. It's basically I basically don't have it. I sold everything that I had to sell. It was available to sell. It's not sitting in a hardware wallet somewhere that I'm just not gonna sell. All right, so yeah, I sold 100% of my Ethereum right there at 4K. We're going to do the exact same thing. When Bitcoin has its blow off top, we're going to do the exact same exercise. I'm going to draw my fib extension levels. I'm going to draw my parabolic trend line. When it comes into resistance, and so this is resistance, and we break down into this level and we lose it, then I'm going to be getting out. And I did the same thing on Cardano, right? Same exact exercise on Cardano. And that was my, at the time, Ethereum and Cardano were by far my second and third largest position behind Bitcoin when all this happened, all this went down. But we didn't have a blow off top in Bitcoin. Really, I mean, if we could have done something similar on this move right here, right? Had I been not overly bullish, I would have sold my leverage position right here as we broke down out of that. I saw it, I was watching it, but I was like, yeah. What I kept thinking was, yeah, I was watching this level right here. I kept thinking this level was going to hold, and it just snapped too fast for us to do anything about it. That level just snapped way too fast. But nonetheless, you could have done something similar there, but it wasn't a blow off top. So it's harder to do when you just have a fresh breakout. But if Bitcoin does go to a parabolic blow off top, it's exactly what we're going to do. Now the sell-off, again, we're doing the exact same thing. You might ask, I have taken a few trades, right? So I did something just like this so far already. Just to show y'all. I've already taken a couple trades on this Bitcoin sell-off. Right. First of all, I bought at 32,000. I think on this, was it over here? I don't remember. But when we snapped this right here, I took a trade here, and it failed on me, and I got out at break even, right? I might have taken a small profit. I might have just call it break even. It's not worth talking about. I've tried that there, and then when that failed, I knew we needed more time, and we needed a further capitulation over here. That's basically what it boils down to. When this breakout failed, and we got out at break even, now we're trying for the next one. After it wasn't going to be a V-shaped bounce back. There was going to be I thought there was going to be some consolidation, but it was worth a shot. I also tried to buy here because this looked like it might have been consolidating for a breakout attempt right here. So it's the exact same thing. I tried to buy. We had where was that trend line I was watching? Somewhere over here. I can't remember. Yeah, but something I don't remember. But we got outside of some trend line I was watching, and I tried to buy the bottom right here, and it just snapped on us, came back up into it, and got out, right? So as we snapped down below this, came back up into it, just got out. Same exact thing. Because it looked like, but now the game is, again, waiting for this to break. One of these times, you keep doing this, one of these times you're going to catch it. And this is how you catch the bottom of things. I'm going to show you all one other time I caught, like, where was that big breakout? 20, where's this right here? This breakout doesn't look so big compared to the second one over here. It's exactly how I caught this move. And that was a big move. I mean, it's bigger than it looks in this chart. But it was basically, I kept buying same exact type of thing. What I did is, I don't know what I was watching. Oh, 4 hours. That makes more sense. On Ethereum, yeah, here it is, right there. That's how you catch these type of, bottom moves. I think I was watching this second bounce. I was. Boom, and I took that breakout right there. And that one smaller position, and I think I might have had some on over here. I don't remember exactly. The other position I might have bought the second touch of that bottom. It doesn't matter. But anyway, that same general philosophy is how I caught this. It ended up being a really big move, and we wrote it, and then I in reverse did the exact same thing. Something like that and sold over here. All right. It might have very well just been this. No, because I remember it shot up. I had a position on it, all of a sudden it just took off. I just happened to have a position on. All right, anyway, nonetheless. Is that it there? I don't know. It doesn't matter. It doesn't matter. All right, I'm getting tired. Running out of time. All right, please. Chody's asking me please on something. Chody, what'd you ask? Can you put a fib from the current levels on BTC? Yeah, well, we're on the downside, but yeah, I can throw a fib on there for you. Let me find a fresh BTC chart, and then I'm going to wrap up early to go to bed. All right, let's do the weekly. So on the downside, we're looking at fib retraces. So the current move, this is really the main sell-off. So it depends on if you're looking for downside or upside targets. That needs to be the top of the green candle. That bounce right there. Let me see here. What else we got? We got the daily. I don't like what I'm seeing. This is better. And these aren't really impulses. The problem is like fibs work better when you have a clear impulse like these over here. So the impulse was to the downside. So, you know, you're looking at from this bottom up to that last green candle there. See what that gives us. Yeah, I was playing with fibs earlier. I didn't like. I couldn't find anything that I was really happy with. Now, you can do a fib extension on the downside too. I don't like the way they turn out. It depends on where you think the impulse was. Impulse to the downside, bounce back. It'd be the top of that candle right there. Stop it, Trading View. So from that bottom to that top right there, that's their first. The other thing is that these wicks, I don't like using those wicks either. Maybe it's better to use this most recent bounce. But every time I do this, I'm getting, well, look, the 618 level. That's interesting. Let's take a look at that. It's not really a true. You see this price action was broken by this, but it's interesting nonetheless. So the problem I have with this fib level from this low is we had these daily candles, and this made a lower low over here, so this kind of reset the fib, and you really should draw it. But it gives us a $27,000 from that red. You know, if I cheat a little bit, we can get a 27,1618, which is kind of interesting. It's kind of you know, that's in my mind right about where I think we'll tap that fresh supply at. And then just a standard fib retrace is like the way you should do it, but it's going to be this right here. But on a bounce back, there's your bounce back levels. Stop it. And again, the other way around. But this is just it's too big of a move. I just don't find it accurate. This is probably the closest thing to accurate you're going to get. And that 23,000 level, maybe that's the level we come into. And it kind of coincides with this weekly over here. This last weekly support's right at 19,000. Now it doesn't coincide, does it? It's not even close. Hold on. I'm getting tired. Yes, well, look at this. Interestingly enough, this little bit of consolidation here, this kind of, we'll call it a bull flag. I think it actually was a wedge. Just whatever. Doesn't matter. The top, that daily close right there, is really close to the 1618 when you anchor the move from the wick low on this feed to, I guess that was the weekly impulse, roughly that top. Pretty close. We go back to the weekly. I like using weeklies because it's so volatile in crypto that I like having a larger data sample size. So the weekly gives me a little bit more accurate, I think. But yeah, so the weekly fib level puts us 1618 at 23,210, which is interestingly pretty close to that. This range that we're gonna have right here puts us right around that level. So there's a potential low for this sell-off as well. I don't know. Just tinkering around with things here, trying to find levels, but all right, I'm running out of juice here. Shiba, don't buy meme coins. End of story. Peace out. Thanks. Yep. I really like the way you break down your thought process. Just found you, by the way, earning a sub. Well, thanks. Appreciate you joining us. Hey, Brad, are you going to let us know when you're buying, getting out? Always follow you, Jordan Heath, but until the confirmation, pull the trigger. I might mention it, but I'm trying to be, just for your sake, we'll get up to 33,000 here. Getting a little bounce. For the sake of everybody, like, I get sick of people just, like, thinking that I'm some kind of alert service and getting mad at me because they did or didn't buy or whatever. I'm helping you understand my thought process, but I don't necessarily want to be like an alert service. That said, you'll probably see me post, on Discord or Twitter. And I'll let people know that, yep, I'm fully back in or whatever. But when I'm in the middle of it, when I'm like watching my charts and I think it's time, I'm not posting anything anywhere. I'm entirely focused on. It takes me it's a lot of work. Every entry is a lot of work because I've got to really think about where's my stop loss? Where do I know I'm wrong? Where can I place a stop that's enough space that I'm safe? I know I'm wrong. I'm going to get out. But I also like the opportunity to be able to shortcut it. So if we fall down off a level, come back up into it, and I know I'm wrong, I like to shortcut my stop losses for little to no loss if I can. So it's a lot of thought that goes into every single entry. And then I've got to go place the orders accordingly. Like I've got to do, is it going to be a limit order? I'm just going to buy market. Where's my, limit price? Where's my stop? I got to construct all that. So I'm focused on doing all that when I'm taking my trades. And then after the fact, I might, break it down for people. So you'll probably get it, but after the fact, after I've spent time analyzing my trade, entered my trade, and I've already started to manage my trade, and then I'll go, all right, guys, I'm in this trade, whatever. So don't think of me as an alert service because you're going to get me just sharing that, I may or may not have made a move well after the fact. All right, guys, good night, everybody. Thank you all. I'm going to light up the Doge-wave. Good night. Thanks for joining.